start with some trivia. We all know that India has a population of 1.4 billion people. That is a lot of people. And out of that, a whopping 850 million use the internet, while 600 million use smartphones. And that is a whole lot of tech-savvy people. Now, when it comes to online activity, Indians are no slouches either. They've got 450 million online gamers, 350 million people who do online transactions, and 185 million online shoppers. Plus, there are 610 million people that hold PAN cards, which is an essential document for financial transactions in India. But it's not just the numbers. There are some fascinating facts about the disproportionate contribution from a small clutch of Indian consumers as well. For instance, did you know that just 1% of Indians account for 45% of all flight passengers? And the top 5% of Zomato users are responsible for a whopping 33% of all orders placed on the app. Even UPI, 6.5% of UPI users are responsible for 44% of transactions. And that's mainly because of the income difference. Just 1% of Indians take home a staggering 22% of India's income. All of this has been put together very beautifully by my colleague Mangla Malu on our series on CNBC-TV18. Good evening, ladies and gentlemen. Thanks very much for joining us for the inaugural episode of the PwC CNBC-TV18 CEO Dialogues. On this series, we curate conversations with industry leaders, thinkers, and deep dive into opportunities and challenges surrounding key business sectors and key issues. On the show today, we put the spotlight on the retail sector and the consumption story. I'm joined by leaders who will talk about India's big consumption story, the new era, the new challenges. Let me introduce our panelists here to you. Sanjeev Krishan, chairperson of PwC in India. Sanjeev, many thanks for joining us. Also with us, Ravi Kapoor, retail and consumer sector leader, head at PwC India. Ravi, thanks very much. Anuj Poddar, the Managing Director and CEO of Bajaj Electricals. Anuj, it's good to have you on the program. Vineet Gautam, the CEO of Bestseller India. Vineet, welcome to the show. Ambarish Murthy, the founder of Pepper Fry, a company that's turned 10. Ambarish, good to have you on the show with us. Manish Taneja, the co-founder and CEO of Purple.com. Manish, good to see you. And Satyan Momaya, CEO of Celio Future Fashion. And also with us, Geetika Mehta, the Managing Director of Hershey's India. Geetika, thanks very much for joining us. As I said, we've got it all covered from clothes to chocolates. And before we talk about what the opportunities are, let me get Ravi here to set the context. Take us through what you believe are going to be the emerging themes, the emerging trends, the challenges and the opportunities for the Indian consumption story.
Thanks, Shereen, and thanks for this lovely platform, and a very warm good evening to all the fellow panelists as well. I think growth is a perennial question which always has answers which are differing by time and by situations. And what I'm going to do is to add some more stats to what you just narrated.
Go right ahead.
So what we have seen is that there is the strongest correlation is per capita GDP. Yeah. Right? So per capita GDP is the biggest correlation of the wealth of the society. And what we have seen is that over 30 years, per capita GDP has roughly grown at a CAGR of 4.5%. And from 1991 onwards, that has pretty much quadrupled categories across the retail spectrum. So there is a straight correlation out there. I'm going to stay optimistic in this conversation, and India is the top three, for last 3 years been the fastest growing economy in the world, right? And the beauty of the Indian GDP is that the personal consumption is almost 60% of the GDP. And the sector that all of us represent is roughly 10% of that. So what that means is that we are integrally tied with domestic consumption. We are integrally tied with the growth of GDP. And let me also just take a more vantage view now, because all of us have heard the positivity and the optimism around we are getting into an Amrit Kal, and I genuinely believe that. And the nearest milestone to that Amrit Kal is 2030, when we want to become, or we would be becoming, the third biggest economy in the world, roughly translating into 5 trillion. And how are we going to do that is because there are several, I would say, enabling factors driving it. If you look at the population, we are a median age 28, and the working cohort in India is going to be 1 billion plus. Who is going to talk such numbers? Go to a Japan, go to even a China, these numbers are not possible today. So with that huge population, there is a huge positivity which needs to get leveraged and tapped. Another big thing which is going to happen, hopefully, is and Geetika is sitting next to me, is the participation of ladies in workforce. Shereen, you lead by example.
I hope so. I think we need to make that happen. I really do believe that in order for us to get to that aspirational number, we cannot do it if half the population is not productively employed.
Yeah. So what we are sensing is that from 20%, and by the way, it's a very low metric across, if you look at any of the cohorts with India, we expect that to just double up by 2030, right? So 40-45% of ladies joining the workforce. And I think there are certain secular trends which continue unabated, which is urbanization. I think all of us sitting in this room would love India to urbanize faster and quicker. We are still just 1/3 urbanized thereabouts. 2/3 India still is living in villages, but that's going to change for sure, right? And the other factors, I think all of us live it. We are a nuclear family country now. Gone are the days of joint families, right? And nuclearization is good for us in that sense of the word. And I think what we should also remember is a lot of efforts which the government is doing to create platforms for driving growth. So whether it is the investment in the hardcore infrastructure of logistics, never before in the history of the country, roughly 2% of the GDP is getting spent on logistics, right? So that's creating those kinds of pathways, which I'm sure, and all of us are talking about D2C and e-commerce and creating access tier 3, 4 and beyond, that would need that kind of infrastructure and service capability. You mentioned a lot of stats around the digital infra which has been created. I'll not dwell on that. And I think we should not forget, GST looks like an old story, but
it's a 5-year-old story, not that old story.
But the way it has driven formalization, the way it has driven the MSME sectors to come into the mainstream is super, super important, because that is driving one key factor of formalization. I think all of us here are representing brands, and formalization is the only way in which brands are going to become critically more important for consumption. And the story there is absolutely glass 90% not full, because the sector is almost just 10% working in the organized space. So there is a lot of opportunity for growth. Now, having said that, where we are sitting today, and we had conversations before the show as well, and there is a lot of here and now versus future that we need to balance any which ways, right? We are running businesses. But I must also say that there are factors which we don't control, right? That's the way of life, right? So whether it is a macroeconomics, whether it is the geopolitics, or whether it is the global supply chain, I think all of us are working in a global ecosystem, right? So those are continuing to be challenges. And I would say that, having said that, there are enough and more things to do for us which we can control. And some of the broad themes I would like to touch upon, and I'm leaving to your expert hands to build it in the conversation, would be how do we remember the Bharat, right? Because that's where the game is. And we have been talking about the bottom of pyramid fortune for almost 10 plus years now. I think it's time that we should live the talk. And it has been shown already, we are the biggest per capita mobile data consumption country in the world. So that has happened because we have not ignored Bharat. So what do we do about it? I think the flip side of Bharat is premiumization, right? Because when you're talking about an urbanized country, it's very important that how do you continue to expand your business footprint in urban India, and that can only happen through urbanization or through premiumization, right? And maybe I'll just pick up two more factors just for another 30 seconds. One would be tech, right? I think we are living in a tech world. No sector is immune from it, and I think all of us understand it. There is enough and more innovation happening in the technology space. And I have heard in my conversations, CEOs really thinking about that, how GPT is going to transform some of my aspects of my value chain. So it's no longer a nice to play thing on your laptops, but it is becoming an important driver of how do I change the way I work. And last but not the least, I think India lives the world of contradictions. We need to drive growth, we need to drive per caps, but we need to do it sustainably. I think that's so, so important. And I think the consumer sector lives the talk, because we are in the face of the consumer's life, right? How we do packaging, how we do recycling, how do we manage our carbon footprint? The consumer is seeing us, and we are talking to consumers, and we are hearing it from them as well. So I think some of these factors are going to be super important. And I'm really looking forward for this conversation because we have a lot to talk about in the next.
We have 11 broad heads to talk about. Ravi, thank you very much for articulating those for us. Very quickly, let me wrap up what we heard there from Ravi, and then we'll, of course, get into the conversation with the panel. The demographic advantage that Ravi spoke about, which also leads into then the aspiration of India wanting to be the workforce of the world, the factory floor of the world. Then we come to the issues of urbanization as well as what happens as far as the rural economy is concerned, or Bharat. Women, gender parity, women's participation in the workforce, and the kind of unlocking that would potentially lead to. That's one of the other aspects as well. Formalization, GST and other aspects, technology, the adoption of technology, which we've already spoken of, and of course, sustainability at the heart of the change that is being driven through the consumption story. But paramount, of course, is that we will need to continue to grow at 6.5%, 7%, 8% plus if we need to get to that aspiration of being able to increase our per capita. Even going from $2,500 to $5,000 and then $10,000 will make a significant leap as far as the consumption story is concerned. So let's get straight to it. And I am going to balance between the here and now as well as over the next 5 years. Beyond that, nobody really knows. And even 5 years is a long time in the environment that we live in. Anuj, let's get started with you. Let's start with the here and now. It's 6 months into the year as well. How do you see 2023 playing out? The positives are that at least on the commodity side, inflation has come off. The negative is that you've actually seen interest rates move higher, and that has impacted perhaps in some categories consumer sentiment. How's demand looking today?
So, Shereen, I'll start with a personal anecdote. We just declared our Q4 or FY23 results yesterday. And to be honest, it was a good quarter. We had growth, etc. And I got a few messages this morning congratulating me. And I said, don't go by the numbers because you don't know how tough it is to get these numbers in. By that, what I mean is that, we are getting the growth, but it almost feels like you're getting it against a very strong headwind. The demand is not there. And then you're really having to work for it, whether it's discounting, other measures, means, etc. That's point one. Point two, actually, I wanted to pick on something that Ravi mentioned and you mentioned statistically in terms of the per capita GDP. And it's almost like for 4-6 quarters that we've been seeing a non-correlation between the GDP and the actual demand. And about 2 quarters ago, we said, no, something's not right, and let's go and dig into that. Which is not to say the numbers are not right, but then we figured the per capita is probably the wrong metric. You have to look at the median GDP, and that will give you a very different picture. And who call that out in the statistics? That's the top 1% that is really consuming. So the median is not looking so rosy, and that's where the real challenge lies. So can we get the median up rather than the average? And that's when you really unlock this demographic dividend and everything else that we talk about. So that's point two. Point three, really, in terms of what you spoke about, commodity inflation and interest rates, I think we are past commodity inflation. That's the good news. So I think costs are in control for us. I think the interest rate hikes have really impacted EMIs, or just, cost of committed liabilities for people. And therefore, the net disposable income has come down. I would hope that we are at the peak of the interest rate hike cycle, if not a reduction. So from here on, I think some of these are sentiments. You give consumers or people 1 or 2 quarters of no price hikes, no inflation, no further interest rate hikes, and they start spending. So it's just it's a game of consumer sentiment. I think no further hikes, everything status quo. In 2 months, 2 quarters or 3 to 4 months, you should be back with a good demand situation. And that's my wish for FY24.
Well, that would certainly be the wish for everybody here on this panel and those who are watching as well. But Ambarish, let's talk about demand at this point in time. Some of the headwinds that we just heard there from Anuj, what are you seeing? Because we saw through the COVID period, a big focus on home renovation, on housing and so on and so forth. What is the situation at this point in time?
No, so I agree with a lot of what Anuj said. I think there are headwinds when it comes to demand. However, you have to also break this up by, let's say, by geography, right? So tier 2, 3 India, I actually think, we're seeing it in our business, continues to, surge ahead. I think the deeper depressions are in the metros and a little bit more in the tier 1 cities. I think the fundamental thing is, especially in our sector, which is the furniture and home goods sector, I think a few trends, and I think some of them he called out. One is the fact that we are going to have a whole bunch of new people coming into the workforce. The fact that there's nuclearization is something that's here to stay, which means more houses and therefore more furniture, more home goods, etc. Those trends actually are intact. what happened during COVID was another fillip to the industry. And I think that's sustained or that's held up, which is the fact that, normally we would have, let's say in a waking day, we would have normally spent 3-4 hours at home. During the COVID pandemic, we started spending 14, 16, 18 hours at home waking, right? And that built a serious consciousness of what you have in your house. So if earlier you would put up with that couch which squeaked a little, now you would no longer do that. And a lot of that panned out through the course of the last 2 years. So in the short term, we are seeing some headwinds. In the longer term, I think the fundamentals behind why India is going to be a great consumer story for the next 5-10 years, I think none of that's changed. And I think that's going to continue.
Yes, and that is the bet that everybody is making. Geetika, let me come to you now. Again, address the here and now in terms of demand and demand visibility. But more importantly, the opportunity and the headroom for growth that everyone is excited about.
So I think indeed there has been a bit of an economic bump in this road, right, of the India shining road. We've seen consumers, and this is all Nielsen data, downgrading to smaller pack sizes, for example, or impulse categories, some of the sheen coming off them. During COVID, frankly, everybody had become home bakers, and everybody was posting these lovely pictures, which was great for a business like ours, right? And now with everybody getting back to work, where is the time to do baking and kind of prettying up your kind of pictures before posting them? So I think there's been that part. However, the narrative doesn't change. We strongly believe that this is a booming business. We see that in growth. While they may have come off a little bit from where they were, they are still very high double-digit growth in all the categories that we play in. So I think going forward, the optimism remains. I think it's just a bit of a temporary bump, and that's how we are looking at it. But our overall kind of ambition around the India business continues unabated.
Okay, what is the ambition for the India business? How would you quantify the ambition for the India business?
Okay, we are a privately held company. I don't think I can give you real numbers, but
it's easier than no one's going to hold you to account. It's easier than to give out quantification.
But I think for us, for example, as Hershey India, a very high double-digit growth is a minimum, that we would expect for the business to do. Surprisingly, in India, and I know Hershey is synonymous with chocolates. In India, we launched chocolates nationally in 2020. Yeah, just before the COVID pandemic hit us. Already, and we've seen phenomenal growth over the last 2-3 years. So we are already number 3 in the category of premium chocolates, and it is now internally our biggest category for us. So that's again something which remains our number 1 priority on how we grow. And I think, of course, the other parts of the business must grow as well. So our spreads, our syrups, our milkshakes. Better for you, which is our brand SoFit, is an area which I think as an emerging trend is here to stay. Consumers are getting more interested in products and foods which are really good for the body, not just the indulgent palate that most of the Hershey business is on. And therefore, that also is an area where our expectations of growth is very high. So yeah, that's how I would quantify it.
Well, no, and thank you for adding another potential opportunity and trend that we saw play out through the COVID period, and it's likely to be more sustainable as we move forward. Of course, is this whole area of good for you, better for you, nutrition, health, and so on and so forth. We need, COVID was good for many of them, but not so much for the fashion business, because who wanted to, at least for some parts of the fashion business, if you were getting into sportswear and sitting at home, and that was a good aspect. But at this point in time, given the fact that there is clearly, from what we're hearing on the panel, some pullback in discretionary spending, are you feeling that at all today?
Yeah, I think we are seeing this headwinds ourselves. We run multiple brands around multiple categories, and we can see this across the categories that there is headwind. While I think there are 2 major reasons in our category, because we saw a lot of shift during pandemic to tier 2, tier 3, where people went back home. So we were expecting a lot of growth coming from tier 2, tier 3. But I think once the pandemic the 3rd wave got over, a lot of people moved back to the metros. So unlike what happened in Pepper Fry, we are seeing the other side. We are seeing slowdown in tier 2, tier 3. Metros continue to grow. And so there is challenges there. But I think the tier 2, tier 3 or the Bharat is where the business is going to be. We retail out of 130 cities in the country today. And I think that is the way forward. India can operate we can operate at about 300 cities in the next 3 to 5 years. And that's what we are trying to do. And the good part is about 40% of our business comes from women's wear. and that's a segment that is growing very rapidly. 40% of workforce is also women. So I think we focus a lot on that, multiple brands in that category. And I think it's one of the categories which is also underpenetrated from brand presence in this country. There are a few international brands, but they're not real Indian brands around there. So we continue to see very large growth. And I agree with her, next 5 years, high double-digit growth in India is not a problem, but it comes at a cost. Because our business is investment business. We have to open retail. It's not distribution business. So it requires continuous investment in terms of capital and also building the brands, building the cult behind it. Different brands have their own strategy, but there is a very wide amount of consumer available in this country in many segments. And the good part that we are seeing is segmentation is becoming sharp. So people start to look at you from that perspective. So you can easily target them because of digital. And 5G is going to be the next game changer. I don't know how many of people are here thinking about ONDC, but I think ONDC is for us is something that we are looking very, very closely. It will mature over time, but what UPI has done to payments, and I think ONDC could do that for retail businesses. So I think that will bring a lot more consumers, inclusive to brands like ours.
Well, again, lots more meat that you've added to the conversation, but I want to pick up on the point that both Geetika and you spoke of, that there is headroom for significantly higher growth. But profitable growth or not is the question. So let me get the two of you. And Satyan, I'll start by asking you that question, and then I'll come to Manish as well. So, growth, yes. And I think everyone is very clear. There is complete consensus on the panel as far as growth is concerned. But profitable growth?
I would actually echo what Ravi said. If you were to look at the fundamentals remain really, really strong. So for us, I represent apparel lifestyle business. And if you were to look at three things. So one, he's already mentioned two of them. One, of fastest growing economy. Second, fastest growing economy. Second one, the young population. And I think the third one is in the apparel, we are seeing a huge shift happening from unorganized to organized. And I think
so the formalization trend.
Formalization. And I think that's really one, the digital helping spread that. And I think, so two things. One, when we actually look at growth, with high growth comes volatility. And I think the benchmark thumb rule which we've been using is, as a company, if you're able to grow 2x the market industry growth rate, and if you're able to grow 2.5x the GDP growth rate, you're a better performing company. And I think what's important is how part of that growth. So profitability is something which you really want to continue to invest in. So as Vineet said, apparel needs a lot of investment in actually growing the category, the organized category. And hence, if you're not really going to be profitable, you're not going to reinvest back, whether it's on capex. So for us, profitable growth, we are seeing a slight headwinds currently, maybe because of the inflationary pressure which we had on prices. And hence some amount of discounting would be higher than last year. But we also have to remember that last year was one of our best years in some time frame. And hence, on back of that, probably like-for-like growth could look a little muted. But honestly, we are very positive about profitable growth. And we continue to look at seeing India as a market which will be one of the fastest growing markets for Celio globally.
Okay, one of the fastest growing markets for you globally. Manish, let's address this issue of growth as well as profitability. And I guess till about 12 months ago, nobody needed to worry so much about profitability because checks were still being written out by somebody else. But in this environment, as we've now seen globally, interest rates move significantly higher and easy money no longer easy. What is that going to mean in terms of growth and the aspiration for growth from here on?
Yeah, I'm one of I'm a minority here because I represent an online business. I think most of the people here represent more offline businesses. I think online businesses have immense operating leverage that we are now beginning to see. To give you a perspective, I think our business would have grown by like 200% over the last 3 years, and our people cost has remained more or less the same. Right? We don't need to employ more people, and with advancement in machine learning, with advancement in AI, even very, very smart decisions for which you actually needed high paying people today, computer does a much, much better job. So, you will be surprised, Shereen, of how many e-commerce companies will break even very, very soon in India. I think a lot of world had written us off that, we had free checks available and hence we were allowed to burn a lot of capital. I mean, Purple has always balanced it out, but I'm saying for many number of companies, which have achieved hyperscale, you will see them turn profitable very soon, if not in a few months, I would say in less than 3 or 4 quarters. So I think it's the nature of the business. I think online businesses give you amazing operating leverage that I'm assuming an offline business does not give you. I think our business operates slightly opposite to how probably a bestseller operates or a CLEO operates. One, we are not a brand business, we are a marketplace business.
Yeah.
So it doesn't really hurt us if people downtrade. If they buy more times a year, we are okay.
As long as they're on your platform.
As long as they're on our platform. Yeah. And I think too, like he mentioned, they had one of their best years last year because I think a lot of people went to offline from being addicted to shopping online in COVID. I would say this quarter, I think our growth rate is north of 50% over same quarter last year with much, much better unit economics and almost close to profitability. So, I think it's a business model shift that one probably needs to make. And I think different business models have different risks. But I would say if you're an online business, I think operating leverage is unbelievable. Like the kind of operating leverage you can get is, I had never imagined this would play out like this.
Well, that's good to hear, and you're absolutely right. I think the focus now is squarely on ensuring that there is profitable growth, and we're already starting to see at least some unicorns report that and focus much more on bringing costs down, etc. Sanjeev, you've heard what everybody on the panel has had to say, and in many ways, I want to link this back to the PwC survey that was released in Davos and ask you this in the context of the strategic choices that each one of these businesses will need to make to ensure that they can actually ride out the storm and capitalize on the opportunity.
Yeah, so thanks again for to everyone. But, talking about that, let me first give you a bit of an anecdote. And it's actually not an anecdote. It's actually data-driven. In the deal street, when you talk about consumer businesses, we only talk about businesses which are pricey and pricier. There is no other term for consumer businesses, and that stayed true for at least the 4 business cycles that I've been in private equity for. So you can well imagine that this sector is the darling in some sense, to the point that you were mentioning earlier. Having said that, I think the survey actually showed, and we spoke about it, that 4 in 10 CEOs globally are talking about significant business disruption and saying that this business will not exist the way it currently exists. Actually, the consumer CEOs are actually a little bit high on that chart. They're saying that more of those in the consumer, maybe that number is, I think, 5 or 5 point something on our scale. So that effectively means, to the point that was just being made by Manish, that I need to continue to reinvent myself. We are dealing with a bunch of transitions at this point in time. We're dealing with a technology transition. We talked about it, and the impact that ChatGPT and others might have. Does it make me more efficient? Or can it create certain challenges for me? Will some of these businesses not exist tomorrow is a question. At the same time, I think the challenge also is that we are also forced to adopt sustainability. And again, that comes at a cost. That again is a significant transition which is happening on the sustainability side. And then there is a significant transition that is happening on supply chains, right? Supply chains are getting disrupted. The way I source, how do I source it? Where does the input come from? And, can I have that source in a way that I can tell my customers on a regular basis, what is it that my brand stands for? I think that is an issue as well. And then finally, the whole workforce transition, which is, of course, very, very critical. And we spoke about how we might have benefited from it from the past, but there is workforce transition as well. Now, these 4 transitions will have to be embraced by each of the consumer businesses as well. All of we could be in different segments of our business. But as we saw in financial services, for instance, the big players got impacted. And some of them have seen significant disruption. And now the disruptors are getting disrupted. So I think that is something that will actually make us more agile and make sure that we are always on our feet. The last thing that I'll say is that, when we look at the consumer themes, the one big theme for us when we talk about retail and consumer is that are we going to be a national business? Are we going to be a local business? Because we have seen for far too long that local businesses survive very, very well. But when local businesses, local brands wish to become national, they hit a bottleneck. And the amount of spend that it requires for a brand to become national from local, from regional, should I say, is at times very, very hard. And that's a huge hump to cross.
Well, talking about going from regional to national, what about international as well? Because everybody is now talking about the Make in India for the world opportunity as we talk about supply chain disruption, etc. And how do you become part of the global value chain is the question as well. And what's the kind of distance that Indian brands will need to cover to make that journey? Anuj, let's talk about some of the transitions that we were just addressing. For a brand like yours, for a company like yours, what is it going to mean in terms of R&D spends? What is it going to mean in terms of differentiation? I mean, how are you reinventing or reimagining the future at this point in time to capitalize on this?
So Shereen, that's my favorite question or topic because, literally, and I was just looking at this panel, we are probably the oldest company in this, on this panel, right? We're 85 years old. So it's a deeply legacy company and deeply in need of reinvention. And that's the journey we've been on for the last 3 to 4 years. And when I say reinvention, firstly, we're trying to flip ourselves into becoming a far more consumer-centric company. To some of the points that Sanjeev made about, you will not survive the next decade if you're not just consumer-centric, but very agile. So one is just trying to change the pace of how quickly do you capture consumer insights and then translate that to products on the shelf. And to that, I think the inspiration comes from fashion companies. You have many fashion companies that can, because fashion changes every season.
Yeah.
And if they can do that, can we, kind of make that happen? So to your question on R&D, first we're just trying to make that far more consumer-centric, B is more agile, and thirdly, really, is we have upped the invention in R&D. But when I say R&D, what we're trying to focus on is meaningful innovation, not techie innovation that makes somebody feel very proud of himself, but that must sell in the marketplace, right? I'm not, in the interest of time, not going to take too many examples, but it has to cater to, let's say, a Indian housewife who wants to, grind her masala, and there's a problem with the mixer blade, and that's the problem you have to solve for, rather than a very techie problem in the gadgets, etc. So R&D is going to be core to surviving, etc. I also want to pick on the question of sustainability. Our contribution to sustainability really revolves around energy efficiency. Most of our products involve consumption of electricity, and the more energy efficient we can make them, we're kind of aligning with the national mission of reducing energy and power consumption, etc. We've just launched fans right now, which people don't realize are the most energy efficient fans in the country under brands. But I think as you start doing that across all the other gadgets and appliances, hopefully we'll get or touch all of these, different factors that we spoke about.
And we were discussing this before we started the conversation, so let me address this issue. In the quest for sustainability, etc., who pays the price for that? I mean, are you expecting the consumer to pick up the tab for that? Or is it going to be something that the company is going to have to do at the back end? Do you make it the consumer's problem, or is it your problem?
I think we can fool ourselves to think that, what people speak and what they say is what they pay for. The consumers want proposition, they want value, and particularly Indian consumers are very price sensitive. And I think it's our job, it's not a criticism of them, it's our job to make sustainability affordable and not unaffordable, especially if you want to cater to more than the top 1%, which is not to say there's no work audiences or consumers, but if you want to make a meaningful mass difference, the masses cannot pay for it. And I think that's our job of R&D, and when I say meaningful innovations, all the innovations that we're doing comes with a price capping that is, applicable to it.
Yeah, and Vineet, I want you to come in on this because he talked about fast fashion, and that's one of the big sectors that does need to do a lot more as far as sustainability is concerned. But again, flipping the question, who pays for it?
I think businesses will have to find efficiencies to pay for it. It is not going to be anyone paying for it. As an investor, I don't want to pay for it. As a consumer, I don't want to pay for it. So I think it is the efficiency that has to be brought in. I think fast fashion has been spoken a lot more, but I think it needs to be built into the system. It just cannot be saying, okay, I'll be sustainable by 2030. I think it's a lot more work, especially in the fashion business, where it needs to start from the design process. We need to start it from the design, how sustainable garments can we make, and then building the whole value chain, tracking that up, and then living up to it. And I think, especially from a bestseller perspective, we do it for ourselves as something which means very important to our business and to our owners. So we don't do it to market. We don't use it as a marketing peg also. but sustainability is core to our business values. So hence I think we will have to pay it for ourselves by building a sustainable business on this basis.
Absolutely, it will have to be at the back end. I want to address one of the issues with Ambarish, Manish, and you, Satyan, this ties in with the move towards digitization, not just within companies, but also digitization as you approach the customer. The other aspect that I want to talk about is, we've all gone through this phase of, are we now omni-channel? Are we phygital? What should we realistically expect in the next few years? Ambarish, I'll start with you and then I'll get to Manish.
So, Shereen, our thesis always has been that it's the same customer. That customer could be on a laptop at some point in time, on a mobile phone at some point in time, or at a mall at a third point in time. And therefore, as a brand or as a company which needs to engage with the customer at all points in time, I don't think we have a choice. You have to engage whichever way the customer wants to engage with you. So I think omni-channel is the default state for businesses today. In our minds, and I think Sanjeev said this, even if you look at how disruption pans out for businesses, right? So let's say 5 years back or 7 years back, right? Furniture was a classic example of a local business. You used to have manufactories which used to sell in a 200-kilometer radius around themselves. The fact that somebody like us built out a supply chain which allowed for those manufactories to sell, let's say, across India, created a massive disruption in that entire sector. It also enabled small businesses to start selling and scaling rapidly. Similarly, omnichannel there was a period of disruption on the thinking of omnichannel. I think now it's just a thing of the past. Every brand is an omnichannel brand. So I think, and perhaps 3 years later, and this is one of the advantages that we have, Purple has from an online perspective. We are tech companies, right? So we have tons of data. So therefore, even the questions.
Is there any company that today says we're not a tech company?
No, I agree. I mean, and I always keep reminding myself, because sometimes I think that we're a supply chain company which incidentally sells furniture. But these are complications. So as a tech company, we have tons of data, right? And when you have tons of data, all the challenges of not having third-party cookies and stuff like that, which will emerge over the next 2-3 years, we can actually begin to solve today. 3 years later, it'll be a disruption. But if you start solving it today, you don't get disrupted, right? So the point I'm making is, omni-channel used to be a classy, trendy word. I actually think it's just the nature of business today. I mean, there is no option.
Manish?
What we've seen in our omni-channelization journey is only 6 months old, so very little data. But what we've seen is, Shereen, there are some consumers I feel who are very, very savvy online consumers. I would say 70-80% of their transactions are online, and maybe 20-30% transactions are offline. And then there are obviously some consumers who are much more comfortable buying offline than they are buying online. What we've seen in our stores, and we just have 8 of them right now, they're only 6 months old. What we've seen is a lot of our churned customers in those zip codes that we opened our stores in have actually returned back, they've shopped with our offline stores, and then they've become active customers of Purple, and they've also now started shopping online again. No amount of discounts or marketing could have gotten them back to Purple. But I think them just experiencing us in our stores got them back to transact with us in our stores, and then sequentially, also coming back to the online store and transacting again. So, I think it builds a lot of trust. Yeah. I think there are a few categories that you just cannot buy online without trying it. In our case, it happens to be foundations. It happens to be a lot of face products which people would prefer trying offline. So I don't disagree with Amrish at all. I think omni-channel is something we will have to embrace. And hence we've started efforts in that direction. I think Pepperfry is much ahead of us. They have 200 stores. But I think it's just true. I think early data shows that we will continue to invest more in it.
Satyan?
For us, it's a little different story. So for us, we also trade through multi-brand partners. We also trade through modern retail. I think omni-channel. So first, we put a digital blueprint about 5 years back, and we said, how can we accelerate D2C? And that's where D2C is direct to consumers offline and our own website. And that's where we made huge progress on actually being omni-channel. But On the other side, on the wholesale, it's a little difficult to really call it. So it's a multi-channel approach there rather than being a omni-channel player, pure play omni-channel play. But on our D2C, we've made big progress. So I think what's really the advantage we have in India on the digital front, we really have cutting-edge technology with some of the startup ecosystem at very reasonable prices. And I think what's really helping, right from forecasting demand to predicting demand to actually buying to allocation to interest to transfer, I think a lot of it is getting done through AI. And so it's a real it's a place where cutting edge technology really helping solve consumer problems and eventually helping consumers shop seamlessly in a D2C. And that's the take we have for at Celium.
Yeah, absolutely. Geetika, are you also are you a technology company, also a chocolate company, or are you still a chocolate company?
We are just the sweetest
chocolate tech.
No, we are just the sweetest place on earth, as we call ourselves. But so we are an all-and-out chocolate company, but absolutely harnessing technology where we can, both internal, inward-facing in the sense of digital transformation, automation, data at our fingertips. Just getting the right information to be able to make insights and moving it forward, but also to the consumer. So how do we really engage with them in a meaningful manner through digital? How do we get personalization done through them? So I don't know if you've seen, we've recently done something called the Hershey campaign, and it's basically making the invisible visible. Her and she is invisible inside Hershey, right? And therefore we really kind of celebrate women who are not talked about as much and talk about their achievements and make their achievements visible. And in order to personalize it, it had a QR code and anybody could then send it to who, they would like to celebrate. So their near and dear ones and get a personalized message going to them. We kind of used a lot of technology. So we had Kareena Kapoor Khan mouthing their name and saying, you are special because XYZ. And I think that's, so technology, but where it matters. I think technology is not the end in itself.
Exactly.
It's a means to get to either better consumer experience or better insight and faster decision making at the back end.
Absolutely. Vineet, you wanted to make a point?
I think I was coming to the point on retail. I think if you want consumer stickiness, retail is very important. I think experience in India, especially of whatever I've seen, whether it's fashion, food, or I've worked in telecom also. The retail front does matter to the consumer. And I think especially in a country where there are no great parks or beaches, I think people end up in shopping malls on high streets. And hence, you will see much more stickiness. And keeping to retain consumers is far easier offline than online. Because online is just a flip of second and you move to another website or another commodity. So I think that's what I wanted to mention. From an Omni perspective, having retail will really, really help stickiness for you.
No, absolutely, you're right in pointing out it's not just experiencing the brand, but it's an outing for a lot of people. Going to a mall is an outing.
Yeah, they are entertainment centers. Malls are entertainment centers anymore. They don't call themselves also, I think, shopping malls anymore. They call them entertainment centers because you are going for food, you are going for the cinema, you're going for the air-conditioned environment, which in our country with the weather system, it really helps a lot of consumers. And I think that brings footfalls and that brings business. And I think that's where retail is becoming much more sustainable than it was a few years back for us.
Ravi, let's talk about how the Indian consumer is changing. We've talked about some of the structural changes that we're seeing as far as the economy is concerned. But let's talk about how the consumer and the consumer habits are changing. Of course, much more now willing to experiment with online and so on and so forth. But for the longest time, what we've always heard about the Indian consumer is value conscious, price sensitive. How do you believe the consumer has changed and what do you see happening on that front?
I think some things don't change as well, right? And I think what Anuj said, I completely agree that the Indian consumer, she is super value conscious. That phenomena is not going to shift, right? She's a very smart consumer, and why she should not be, because that's a global phenomenon. So I would say that part stays strong. I think, but her ability to experiment is going up, right? Look at the way the plethora of D2C food brands which have come into play, right? The experimentation quotient is going up. And that's why you see a bigger basket of brands coming and making a room for themselves, right? What Sanjeev talked about, whether it's a regional brand trying to become national, and there have been some success stories as well on that. So I would say the quotient of experimentation has gone up. I would say her expectation has also gone up, right? Because what we are talking to our clients is personalization at scale, right? So really deploying technology and trying to see that, is it meant for me? and it would be more relevant for certain parts of the economy and less for others. But I would say that part has also kind of gone up. And I would say maybe the last point I would say is that she is also looking at experiences. We don't have anybody representing the experience side of the economy, but it's not just products and more, but also getting good experiences for her family, right? So that part also is becoming important. So whether it is going out into a mall and shopping, whether it's a great online experience which is frictionless, or actually physically going and enjoying, as the case may be. So some of these trends, I would say, are becoming more strengthened over a period of time.
Yeah, no, go ahead.
Here. You know, 11 years ago when we started Purple, we used to sell different merchandise in Mumbai, Delhi versus smaller cities. I think a trend that we've been observing over the last 3-4 years is the same stuff is selling in Bihar and the same stuff is selling in Delhi. The same lipstick shades are selling here as they are selling anywhere else. I have a friend who runs a fashion company. He tells me the same baggy jeans that are selling in Delhi are also selling in Bihar. I think 2017-18 onwards, ever since Geo took off and our data consumption took off, I think the aspirations to buy products in tier 3, tier 4 cities are very, very similar to aspirations in metros. The access is now there because of online, and people can order it online and buy. And I think that's been the single biggest, I would say, change that I've seen over the last 10, 11 years, where people are just buying exactly very, very similar products as they're buying in metros, or whether you're in a very remote part of any other state in India.
So in a way, the internet has actually led to a homogenization as far as consumer preferences are concerned. But you know what hasn't changed, or perhaps we could get some indication from you, Anuj, is that it continues to be a fairly diverse country, right? I mean, the experience of sales for a company in the south could be potentially very different from what a company experiences in the north. Those regional differences, how large are those? Have you seen those gaps widen or shrink?
So, my view is that we are an extremely diverse country for multiple reasons, whether you're talking about geographical access, which means climate, whether it's, affluence, segments or different segments, etc. And my experience is, take a category like pressure cookers, and I didn't know this till when I got into this company, that the same pressure cooker will not sell across the country. All my growing up years in Mumbai, I'd seen pressure cookers with a lid that goes inside.
Yeah.
And if you go to south of India, the lid is always outside. And a simple thing like that, I don't think it has a fundamental difference on the cooking, but the South Indian homes will have a lid on the outside, and the Western home, Mumbai home, will have the lid on the inside. And that changes the whole mold, the R&D, the supply chain, everything. And I can give you many examples. Fans, the fan that will sell in south of India will not sell in north of India, and vice versa. And for many reasons like that. So
what's the issue with the fan?
I mean, it's just it's the colors that they want, the speed they want versus somebody wants energy, etc. So I think consumers have their strong preferences and behavioral tendencies, and there are beyond just purely functional needs, that there are these diversities that exist. I think the challenge for us that we are trying to solve for, and I look at McDonald's standard product, and then I look at the local restaurant, Shiv Sagar, such a long menu. How will Shiv Sagar ever become McDonald's? If I want to be bespoke, I want to give everything to everybody, I will never build a scale of, company of scale. So we're trying to solve for, I don't have an answer, but we need to find a confluence between this need to personalize, which is a real need. I cannot deny that to the consumer, and yet operate at a scale at some kind of common homogeneous platformication or whatever we call it.
Yeah. You wanted to make a point, Satyan.
So for us, I would
You just have to hold the mic higher.
So price value equation is what I would say is the right term. Probably if you're able to offer a price value equation, consumer, whether he's actually in Punjab or whether he's actually in Chennai, I think if you're able to get product innovation, you're able to get the global trends at the same time, consumer is actually really open to adapting. And I think we've seen a big change happening in the consumer behavior. It's not just loyalty. Consumers are actually willing to experiment, try out new brands, and till the time you are actually able to offer them genuine innovation, genuine value for money. I think we always say India is a price-sensitive market.
Yeah.
I would partially agree, but I think the term would be India is a really price-value equation market, and till the time you're able to offer that, I think consumers really appreciate the effort gone into offering that.
No, I agree with you. So, Sanjeev, everyone's talking about disruption. disruption of the market, but also disruption of their own individual businesses. What do you see as being the big disruptors as we look ahead?
So to me, I think two things. One, because we are dealing with a consumer who's always online, right? And we talk about digital interfaces, the fact that we have a much more informed consumer at this point in time, a consumer who's also wanting to focus on what we call purpose. So again, that goes the whole focus on sustainability in whichever shape or form, and whoever pays for it, to the earlier conversation that we had. And I think also a consumer who's more globally aligned. He knows the global trends, etc. He wants, we were talking about how people are embracing the same thing in Bihar and Delhi. Likewise, they want to embrace the same things which are happening in, let's say, New York and so on and so forth, etc. So we are talking about an aspirational consumer, a very well-informed consumer, and there is so much data. We are at the cutting edge of technology. India is at the cutting edge of technology. We get so much data and we analyze so much data. So I think this consumer is a very discerning consumer. And of course, on top of it, whether we call it price conscious or value conscious consumer, it is something which has to be delivered at a particular margin. You can't always necessarily look at margin expansion. So you need to look at your supply chains and value chains, etc., to make sure that you are actually maintaining your margins. If not, if the gains are all coming from volume expansion. So I think these are things that will continue to disrupt. I think one big thing which I also think which is going to be a huge shift really is, and it could be an enabler, is what's happening on the policy side and what's happening on the regulatory side. So for instance, we are talking about like for instance, the foreign direct investment rules have been eased in India over the years, etc. So that's one thing which has got many more things available to Indian consumers. Second thing is to the business per se. What do, for instance, the whole FTA regime does, right? I mean, that's again going to be a huge enabler for businesses per se, because they are hopefully able to either source more or sell more, to the point that you were mentioning about geographic expansion. I think that will also change the shape of the industry in times to come.
Oh, yes, absolutely. Those are two important factors that you bring up. Of course, with FDI, we've of course seen private equity coming into Indian consumer brands, but we've also seen international consumer brands setting up base here in India. I mean, Tim Cook was here for a week in India, opening the Apple stores for the very first time. So there is that opportunity as well. I'm going to end by asking each one of you a quick wrap-up question. Vineet, I'll start by asking you. If I were to ask you what your vision board for the next 5 years looks like, what will it be? What will it say?
I'll say we should at least triple our business from here, and on the bottom line, at least make it 5 times more than what we are today. That will be our vision board. There will be a lot to do. I think in fashion business, especially, putting a 5-year vision is very difficult because the trends change so fast. But I think on a ballpark, that will be our vision. Plus ensuring that our brands stand for sustainability. Our brands are household brand names. I think those are going to be immediate points for us on a vision board.
Geetika?
I think apart from the growth metrics we spoke about, market share, profitability, I think for me the most important one would be to win the war of talent. Because that's really important, right? Eventually everything else will kind of reach the same level. Everybody will have the access to the same technologies, and it's the people who use those technologies that will make a difference. So for me, that will be how I see it. And therefore, from a vision lens, I think I would call us out to be more bold, be more courageous and entrepreneurial in order to win this war of talent.
Okay, well, war of talent is an important one. Satyan? Vision board and mission board.
So I think our vision is to be one of the largest affiliates outside the home country with France. And I think, so as we said, outside the growth, I think we also look at exporting talent to global and be one of the testing, especially on digital initiatives, be a test for France, which is our head office. So I think a lot of positiveness.
So you've become the tech incubator for the group.
Yeah. So that's our vision. We want to only be better at that. And actually, as we've also doubled down on sourcing increase from India for our global. And I think India, being a manufacturing country, not only does benefits us, but it also benefits globally. So a lot of positive positivity for the company overall.
Absolutely, and that sourcing opportunity that you speak of is an opportunity for a large number of small and medium enterprises in the country, and the hope is that we will continue to see that build itself out as we see this diversification of supply chains taking shape. Manish, vision and mission.
You know, I would say there are two key focus areas for the firm over the next 5 years, or I'd be very happy if we get to those. I think the first one is we will double down on our investments in R&D, not just in software, but also in beauty products. I mean, I would say we have one of the best technology teams in the country, and I think that's something we will continue to double down on. We've seen immense benefit. Like I mentioned, operating leverage is something that has exceeded my expectations by a big mile. And I think second, you know, something that CNBC-TV18 would be very interested in. I think we will go public before we end the next 5 years. So, yeah, I would say that would be a good two things to work on.
Well, it would be nice to have you listed as well, and we look forward to that. Ambarish, I'm sure yours is going to be sooner than the next 5 years, right?
Yeah, so you asked me for the vision statement. That would be, I mean, it's actually grand, but I would say that we look to spark a feeling called home across the world. And that's what we would look to do 5 years from now, or across many years. The second is, how do we get there, right? And in order to get there, yeah, going public would be a great achievement. And I also
Next
think that
year?
I've been told not to give a specific timeline, so I'm not going to give it. So towards this mission statement, everything we do, I actually think is to counter every possible disruption in a relatively unorganized category. That is something that on every single day basis, we would look to be aware of and ensure that we are ahead of the curve on any disruption that happens. And so that would be small steps towards the broader goal of sparking a feeling called home across the world. Yeah?
You've got 85 years of a legacy to take forward, Anuj. I don't envy you. So what is the next 5 years? What's your mission and vision board looking like?
So I'm very happy with the 85 years. No complaints on that. You know, our brand tagline for our flagship brand, Bajaj, is built for life. And therefore, you know, as a company, my vision statement would be that, you know, we want to be the most consumer-centric company, the most agile company in our sector, which is truly built for life. Yeah. And, you know, that will really take us forward.
Well, we wish you the very best of luck with that. Yes, Sanjeev?
Yeah, I think our mission would be to get the vision of all these people here on the panel come true. And I think with that, we would have achieved our mission.
Your mission would be accomplished if they achieve all of what they've set out to do. But Geetika and gentlemen, it's been an absolute pleasure. Thank you so much for joining us here on the inaugural PwC CNBC TV18 CEO Dialogue. As we promised, these are conversations that we will curate with the effort to try and understand what's happening with different sectors, to understand the opportunities, the challenges as well, and to really get insights from people who are getting their hands dirty, who are in the trenches. And I hope that we provided some food for thought here this evening. From all of us here on the team, for now, goodbye. Many thanks for watching.